Sometimes it is so darn ugly that you have no choice but to view the weakness as a buying opportunity. This morning, the futures created some serious ugliness, but the individual stocks in the index wouldn't comply. Why? Because, well, we have a lot of stocks of companies that aren't making money, and, I don't like them. We also have enough solvent, strong companies with stocks that would be getting killed this week. So today felt like a little counter-trend move, with the real economy-focused Dow Jones Industrial Average tumbling 310 points, while the more diversified S&P 500 dipped 0.05%, and the tech-laden Nasdaq actually gained 0.13%. But look, it was a very complicated day because it really did feel like a bottom, and yet I know that could be chimerical. But how about next week? Look, the next leg of this market comes down to the Federal Reserve and a few very important quarters. I think both could be tailwinds after this week's vicious shakeout. Let's tackle the Fed first because, well, they meet in less than a month on December 9th and 10th. And in the lead up to that meeting, we're going to hear from a ton of Fed officials, and there'll be a big guessing game that I can't stand. So I'm going to solve that for you right now. For example, on Monday, John Williams speaks. He's the president of the influential New York Fed, and bulls need him to talk about how either inflation's peaked or more likely how unemployment has gotten worse. After this week's declines, if we get some dovish commentary, I think people will begin to creep out of their foxholes, do some buying. Williams will be incredibly important because he also speaks on Wednesday and he speaks Friday. This guy's got a lot to say, I guess.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.